Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment is Jason Metz, insurance analyst at Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss how credit affects car insurance rates. Jason, it's great to have you back with us. Welcome to Trade Talks.
Thank you.
You got it. And car insurance companies use several factors to come up with our rates, such as driving history, the type of car we drive, where we live. Many car insurance companies also use credit to calculate your rates. How are credit-based insurance scores calculated?
So credit-based insurance scores are similar to a regular insurance score that you might get through FICO, and it uses similar weighting factors. Payment history, your current levels of debt, the length of your credit history, any new credit that you might have got or pursuit of a new credit, such as a hard pull, and the types of credit you have, which might include credit cards, car loans, student loans, mortgages, etc.
How do credit-based insurance scores differ from credit scores?
So essentially, it's those factors just weighted slightly differently. Credit-based insurance scores put a little bit more weight on your payment history and your current levels of debt, and a little less weight on the types of credit used, like your credit cards and car loans.
Right, that would make sense. Do credit-based insurance scores mean more money out of our pockets then?
So if you have a better credit-based insurance score, that means you're going to pay better rates. So conversely, if you have a poor credit-based insurance score, you're going to pay more. And we did an analysis on how much more people with poor credit were paying, and it's kind of eye-opening. We found that in the 46 states that allow credit-based insurance scores as part of the rate calculation, the states that do not, by the way, are California, Massachusetts, Hawaii, Michigan. The other 46 states, we found an average of a 76% increase in insurance rates compared to a driver with a good, clean driving record and a better insurance score. That translates to about $1,100 a month, or I'm sorry, $1,100 per year more. We also took a look at how much people pay if they had other things that might affect their car insurance rates. For example, if somebody has a DUI record, they on average pay 74% more. If somebody has a speeding ticket, they on average pay 21% more. And for someone who has an at-fault accident, they pay about 41% more. So what we found was people who have a poor credit-based insurance score were paying more money per year than drivers with a DUI or an at-fault accident or a speeding ticket.
You're sitting here citing those stats, 76% for poor credit. Meanwhile, someone with a DUI is paying significantly less. I'm trying to wrap my head around that. So what happens if my credit affects my car insurance rates?
Unfortunately, until your credit-based insurance score improves, you're kind of stuck with poor rates through that insurance company. It's not like your driving history, where in most states, when they calculate rates, they'll look at your last 3 to 5 years based on where you live. And, let's say you have a speeding ticket and 3 years go by, you have a clean driving history now. That speeding ticket's gone. That doesn't affect your rates. If you have a poor credit-based insurance score, that can follow you around for as long as that score is considered poor in the insurance company's eyes.
Is it possible to lower car insurance rates if you have bad credit?
Yeah, I think a lot of advice you'll see is to work on improving your credit score. And that, to me, is a completely frustrating answer. For another reason, that there's so many different outside factors that can impact somebody's financial health, right? I mean, we've seen it in the last couple of years with illnesses, job loss, et cetera. But that is something that you want to do long-term, but obviously you can't improve your credit score overnight. But there are some things that you can do right now if you're getting hit by this. First and foremost is you can do comparison shopping. You don't need to accept what you're paying at your insurance company. You are able to switch car insurance companies. Not every car insurance company prices their policy the same. Not every car insurance company puts as much emphasis on a credit-based insurance score. So what you want to do, you can go to a car insurance company's website and you can get quotes from them, or you can use like a comparison site generator to get multiple quotes at once. You may be able to find cheaper rates elsewhere. Another thing you could do is you can call your insurance agent and ask if you qualify for any discounts. If you're a good driver, you should be rewarded for that. If you have safety features in your car, you might qualify for a discount for that. So there's various discounts that you can qualify for. And then one more thing that you might want to consider is change the model of car insurance company. And what I mean by that is for specific drivers, you might do well by using what's called telematics, which is tracked through your phone or device into your car, which tracks your good driving behaviors and puts more emphasis on how you drive on the road versus what your credit score may be. These telematics, most insurance companies have them, and they track things like your speeding, your hard cornering, what time of day you drive, if you drive during more busy times, et cetera. And you can get discounts if you're a good driver. Another model you might want to consider is pay per mile insurance, which is what it sounds like. You get charged a monthly rate and then a per mileage fee. If you are a low mileage driver, you could save significantly, but just keep in mind that, if you're not a low mileage driver, you might end up paying more than a traditional model. But those are three things that you can do right now that you may be able to lower your rates.
So Jason, I'm just thinking of all these scenarios in my head. If I were to have bad credit and working from home some days a week, my car literally sits for 12, 14 hours at a train station. It's just crazy to hear that you get dinged. I mean, 76%. So this credit-based car insurance, it sounds like it's a controversial topic. There's going to be demographics that it's going to hit. And so is this getting attention from lawmakers? What does the road ahead look like?
Yeah, so it's absolutely a controversial topic. In 2020, Senator Cory Booker introduced the PAID Act, that stands for Prohibit Auto Insurance Discrimination. And that seeks to eliminate non-driving factors such as gender, marital status, occupation, and credit-based insurance scores. That died in Congress. It didn't go anywhere. So right now that's dormant. That could be brought up in another bill in the future, but as we're sitting here, nothing's happening on that end. More recently in Washington state, the insurance commissioner, Mike Creedler, put a temporary ban on credit-based insurance scores for auto insurance. This, I believe, active on March 4th and will last 3 years. This was in response to the pandemic and some financial stress that a lot of folks are experiencing. But he also has gone on record saying that he believes that credit-based insurance scores disparately impact lower income communities and communities of color. Lastly, the National Association of Insurance Commissioners, a couple years ago, they made a pledge to address racism and discrimination within the insurance industry. One of the things that they're looking at are these non-driving factors like we're talking about, specifically credit-based insurance scores as well. So as we sit here talking today, there's not a lot of movement on it, but there may be more eyes on it than, let's say, 5-10 years ago. But that doesn't do anything for anybody sitting here that's getting hit by these higher rates. So I would just go back to what we talked about earlier, get quotes from multiple companies, ask for discounts, and maybe consider a model like pay per mile insurance or usage-based insurance.
Yeah, it's really shocking that there has not been any reform to the industry. It was shocking. I was reading your work last night, and I could not believe some of the stats. But Jason, we appreciate your insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.